Luno, the fastest, easiest way to buy Bitcoin. If you're just getting into crypto, it's the perfect place to start. Hey guys, and welcome back to my show. So this is sponsored and powered by Icon Plus. So a really quick news announcement for you. So Icon Loop and the Seoul government have announced the mass implementation of blockchain-based contactless online reservations for more than 7,000 public services. So always really interesting news coming out from Icon there. Now, as you know, as always, it is also sponsored by BlockFi. So you can actually earn up to 8.6% interest on your USDC. I use them, and if you follow the link, there's a link somewhere, maybe scrolling at the bottom, you can actually get up to $250 when you sign up. Now, guys, if you are watching on YouTube, please don't forget to hit the like button and hit subscribe so you never miss any of these fantastic guests. Now, joining me today, I'm really excited. We don't know each other very well, so we're going to get to know each other, and it's going to be really fun. So joining me today is the CIO and the founder of BlockTower Capital. It is Ari Paul. Ari, what's up? How are you doing?
Doing well. How are you?
Yeah, I'm good. We tried to sort of get to know each other a little bit before, but we had some internet issues. So here we are. So where are you based?
Today I'm in New York, but our whole firm's going to be in Miami in a couple months. And with COVID, we've been pretty spread out and decentralized.
Yeah, I think this whole COVID thing is just insane because I feel like our industry is the only industry which has really kind of found its way. You know, we've been able to shine, we've been able to continue working, we've been able to, you know, just do what we do best.
Yeah, the one thing missing, and I say missing, you know, kind of half facetiously, are the just the conference circuit, which was such a big part of the 2017 experience. I had very mixed feelings about it. I'm an introvert. I always found the conferences exhausting, even when they're fun and exciting and it's great energy and great people. I still like 3 hours and I'm toast. So I'm kind of happy to be missing that. On the other hand, there is a little, the energy is amazing when you've got 2,000 people who are just religious fanatics. You know, it's almost like a sporting event.
Yeah, I know what you mean. It's one of the things that I really miss, but it's something I keep hearing from introverts like yourself say, oh, well, you know, I haven't had to socialize. I don't have to do this. I don't have to do that. But there is a conference in Miami. You said you're going to go down to Miami. Are you going to be at the conference in June?
Yeah, I think it seems like everyone's going to be there. I think there's a bit of pent up demand to meet in person. So I will be there. I'm sure it'll be an exhausting whirlwind, but also a lot of fun.
Yeah, absolutely. So I want to go back a bit and understand a little bit about who you are, how you got into this space. So for those that don't know who Ari is, how would you describe yourself?
I'm an investing geek. I love thinking about kind of economic history and the history of markets, and cryptocurrency is such a fascinating petri dish where it's like we actually get to see the birth of a new asset class, the growth and maturation of markets. So I was a trader at Susquehanna National Group at the start of my career. Then I was an allocator at the Chicago Endowment, which is an $8 billion endowment, kind of long-term investing. So yeah, I came from kind of both ends of traditional finance, short-term trading, long-term investing, and then in 2017 launched BlockTower and have been all in is an understatement on crypto. 24/7 markets. You know, I do not have a life outside of my job and this market.
But, you know, dedicating your, like you said, you don't have a life outside of it. So dedicating your life to this space, something which is so new, takes so much conviction and so much passion. So how did you initially hear about Bitcoin? Because I saw an interview that you did and you said when you first heard about it, you were like, nah, this isn't it.
Yeah, I like bringing this up every once in a while as just a reminder to be humble and understanding of people who take a while to come around to it. So the first reference I can find in my email to Bitcoin was a friend telling me to buy it or at least look at it in 2011. And I didn't even remember, like when I launched BlockTower in 2017, I didn't remember ever getting that email. This was just like I searched my inbox for the first reference, and my response to my friend was, cryptocurrency will never have value because value comes from either a long-term societal appreciation like gold or fiat backed by guns. So that was my categorical dismissal that crypto will never be, you know, worth anything in 2011. And then it wasn't until 2014 that I bought Bitcoin, and I wasn't a convert at that point. I dabbled, and then I kind of just gradually fell down the rabbit hole spend hundreds of hours learning each of the pieces, the basics of, I don't even want to say I know the basics of cryptography because I don't, but I know enough to understand how cryptography works in crypto. And I know enough about blockchain engineering to know that piece of the puzzle. So I think for a lot of people in crypto, most people are initially dismissive, including, some of the core devs like Gregory Maxwell is one of the most prominent Bitcoin core developers. And he famously, in the very beginning on one of the initial Bitcoin kind of discussion forums, said, this doesn't work. It's not Byzantine fault tolerant. So, everyone, I think Adam Back was the same, who's the founder of Blockstream. And
I didn't know he was the same. I didn't know Adam Back.
Yeah, in the very beginning, he was scout. Both of those guys have been in since, I don't know, I think 2010. So this isn't meant to insult them at all. It's the opposite. It's just, even the people who built Bitcoin were basically everyone's initially skeptical, and then you have to kind of unwrap the pieces to understand how they all work together and that this does. And part of the reason is that there is no magic bullet with Bitcoin. So it's not like there's a single thing that solves a critical problem in an obvious way. So like Maxwell's initial objection was Bitcoin doesn't solve the game theory problem. It's not actually Byzantine fault tolerant. It doesn't perfectly coordinate and ensure finality and security and all these things. But it's practically Byzantine fault tolerant. It's probabilistically fault tolerant. And so it requires a little bit of this real world application to say, like, maybe this will work in the wild. And then we see proof of, we see it in the wild. We see proof of concept. We see that proof of work has, worked for 11 years now, or 11 years, almost 12.
12, 11, basically.
12.
So
yeah.
wait, so 12, yeah. So what was
12,
that?
Right.
12, 11, because you've got the white paper, then the Genesis block and so on. But when was that aha moment? Because I think you're totally right that everybody straight away is just like, gosh, I'm really skeptical of this. Just thinking back, the first time I'd heard of Bitcoin was honestly because somebody I knew was buying drugs online, and from Silk Road, and that's just the harsh reality of it. And that was back in 2013. So, and it took years later until I even invested or took an interest in it, to be honest. So what was your aha moment?
I really didn't have a single moment. It's not unusual. Generally, new technology, it gets adopted by pull. And usually the pull is, if it's something disruptive, it's often people who are not served by whatever existed before. And those are often fringe communities or illegal or marginalized communities. So not at all surprising that Bitcoin's kind of first proof of concept would be drugs, something that traditional banking, isn't going to knowingly support. I say that banks pay fines every year for knowingly supporting drug trafficking. So they do knowingly support it.
Hey? Good old HSBC.
So I don't think it was a single moment. It was, I was looking for something like Bitcoin because I thought basically after the financial crisis since 2009, central banks around the world are printing so much fiat. Eventually this is going to be inflationary. I really wanted to financially bet on currency depreciation. And I was looking for something like Bitcoin, but even when I saw Bitcoin, it didn't really click that this was the thing. The thing for me, I think it was really just putting these pieces together and answering the objections. So when I first looked at, there are a lot of legitimate criticisms of Bitcoin. I say legitimate in the sense that they require a lot of work to overcome. So you have the game theory stuff, is proof of work. If I looked at proof of work, before Bitcoin existed, I would probably say this won't work, And then on the, you have to know all these pieces. You have to know enough about the cryptography to understand why it's secure. Even the legal regulatory side, understanding why it's not easy for, Coin Center does great work on this, and they argue that it's unconstitutional for the US to just ban Bitcoin. And so having an understanding that
why is that because of a freedom of speech standpoint in terms of the freedom to express what you want to buy? Like that?
No, I don't. I think they may make that argument. So first, apologies to Coin Center, because whatever I say is going to be a horrible, if not a misrepresentation, at least certainly far less articulate than they word things. But one of the arguments is governments can't. Well, I shouldn't say governments. The U.S. government can't arbitrarily dictate what we can buy and sell. So the idea of one of the clauses in the Constitution is those rights not explicitly delegated to the federal government or reserved to the states. So the federal government it basically needs a compelling reason to be able to tell you what you can do. And that reason is very, very broad. Basically, the federal government can regulate interstate commerce, which gets used as a catch-all. But they've argued that, God, I'm really not going to do this justice.
It's okay.
Basically,
I'm actually writing this down. Because I really want to know. I've got this written down. So unconstitutional. And what was the company you said that spoke about it?
Oh, well, Coin Center, they're
Coin
a
Center.
nonprofit lobbying group
Yeah.
that plays a really important role in our industry. They're kind of the nonprofit lobbying group. There are definitely others, but they're the prominent ones, and it's run by Jerry Brito and Peter Van Valkenburg, and they advocate for cryptocurrency as sophisticated lawyers. So they're constantly writing legal arguments. They present those to judges, to legislators. They act as lobbyists to promote good legislation and oppose bad stuff, and they provide legal fodder for lawyers who are going to be defending any crypto startup, for example. So when the SEC is making very broad statements about ICOs, for example, Coin Center will issue very detailed legal briefs in response and say, or actually a great example of this was when the Treasury Department in December was when they had their proposed FinCEN rule by Stephen Mnuchin, the Treasury Secretary. Coin Center responded something like 2 weeks later with a 70-page brief, kind of dissecting it and saying, we think this is illegal for like 19 different reasons. It was actually amazing, the list of things that they claimed the proposed rule violated. And from memory, a few of them were like, the proposed rulemaking process was illegally short, and they didn't leave proper time for comments and consideration, and the fact that it was rushed violated a few different ordinances, and they felt it violated what is it? Not Fourth Amendment. Basically, the privacy penumbra, because there was no compelling reason for the information they were demanding that Coinbase turn over to FinCEN. So just this long list of objections.
That's really interesting. I actually had no idea that there was an objection that banning, obviously as a British person, I had no idea that banning Bitcoin could potentially be unconstitutional. I need to look into that. That's really interesting. But just on this topic then, I kind of wanted to wait a little bit until we delved into it. But here we are. I really want to talk to you about energy, because this is something which has just been going on so much, from NFTs to Bitcoin every single day. And this is getting really political as well. Every single day, let's take The Guardian, for example. That's a really left-wing newspaper in the UK. They're constantly talking about how the energy consumption of Bitcoin is just insane. So how do you address that? Because I've seen a lot of articles about it, and I've seen a lot of people talk about renewable energy and actually how Bitcoin is more to do with cleaner energy, but I honestly don't fully understand. So I would love for you to just explain this.
Sure. Nick Carter has done some great work. Nick is a fund manager in the space and an excellent writer. He's written the closest that we have to kind of the definitive rebuttal on this. And if you just Google search Nick Carter, and it's Nick NIC, Nick Carter, Bitcoin Energy, a bunch of his essays will pop up. Frankly, it's a fairly simple set of arguments. Electricity is hard to move from place to place. So recently in the US, we had people freezing in Texas due to electricity shortage, even while we had plenty of electricity on the East Coast in the US. It's really hard to move electricity a long distance. And people don't know, I was an electricity trader briefly at Susquehanna International Group, and I traded, among other things, Texas electricity. And the first thing you learn as an electricity trader is the US and the world have very, very separate electricity markets, and electricity doesn't really flow between them. There's basically like these tiny connections between. Texas is known as ERCOT. That's the name of the power grid. The Northeast has something called PJM, which is an acronym for Pennsylvania, New Jersey, and Maryland. And those are distinct energy grids, and very, very little electricity can move across them. That's not, by the way, necessarily always going to be true. You can build kind of the right kinds of power lines to move a lot of power, but the world basically hasn't. The US certainly hasn't. So, part of the reason this is a complex topic is just it's not rocket science, but there's a lot of this kind of like specific info that people aren't familiar with, so hard to move power place to place. Almost all other electricity demand is local, in the sense that you typically need your power plant and your generator right near an industrial center. Because it's hard to move electricity long distance, where does electricity get used? It gets used by factories and by urban centers. So Bitcoin's the exception. Bitcoin, you can have a giant Bitcoin mining farm with 3 employees. So you can build that anywhere in the world. And so what happens is the cheapest electricity tends to be in very remote places, and it tends to be renewable. So things like geothermal in Iceland and Scandinavia, hydroelectric power in the Pacific Northwest, as well as Northwest China. Renewables and like wind farms, solar farms, they're cheapest to build where there's no people, where land is very, very cheap. So what's been happening is every year, more and more of Bitcoin's mining power comes from renewables, and it incentivizes research in renewables because it's an arms race. It's a hyper-competitive competition among people to find the cheapest source of power anywhere in the world. And it happens that the innovation is really happening on the renewable side. Coal isn't really getting any cheaper, and it's happening in far-flung remote areas. So,
where's the renewable bit coming in? I'm missing that bit. Where's the renewable bit coming in?
So the distinction is that with fossil fuels, they kind of are where they are. So the coal deposits will be wherever they are. So it's two things. One, it's location. A lot of the renewables are by far cheapest in very remote places where they're not attractive to traditional industry. So solar and wind are just a great example where like solar panels take up a huge amount of physical space. You're not going to build a giant solar farm outside of New York City because the land's too expensive, right? So the place, basically this is the use case where renewables are naturally the most competitive. That makes Bitcoin one of the first kind of general adopters of renewable energy at giant scale. And you get economies of scale, you get efficiency. And so when you have a lot of people around the world investing hundreds of millions of dollars and trying to build the most competitive Bitcoin mining farm they can, that's a lot of money getting put into renewables research and even just economies of scale. So for example, like photovoltaic cells, solar panels, they're much cheaper the more you make of them. And so the problem historically has been, this is part of the reason why governments will try to subsidize renewable energy. One of the economic reasons is, okay, if you build one solar panel, it's crazy expensive and it's super uncompetitive. But if you build 1 million of them, it's actually only a little bit more expensive than oil. And so if the government subsidizes to get to a certain scale, then it actually doesn't need to be that big of a subsidy because solar panels aren't that uncompetitive at scale. And in a few years, solar panels are actually going to be cheaper than oil in many parts of the world. And when I say a few years, I'm not in the weeds on exactly how long, but like a lot of energy experts are projecting 5 to 10 years until solar panels generally are just cheaper as a source of energy than oil. So this is a temporary problem. In 10 years, Bitcoin is almost certainly going to be mostly renewable energy. And I actually think it's a positive environmentally because it pushes for innovation in renewables in a way that is then going to cause even industrial centers to use more renewable energy.
Okay, so firstly, thank you for that. That was actually really helpful. That actually was like really, really super helpful. But given that, okay, I've got it now, but why is this so difficult for people to jump on board with? Do you think that it's actually not that difficult for them to understand? It's more just they don't like it. It doesn't fit the narrative. Bitcoin is too disruptive. So let's just find some FUD and kind of.
I think it's largely, look, for the audience of those articles, I don't fault a reader because nothing I said was that complicated, but it was a little bit of quirky knowledge that most people don't have. Like most people don't know how electrical grids work, right? Like why would you? Why would you know that? So for the readers of the articles, I think they're just getting fooled by bad journalism. The journalists have a very clear, it's just such a simple, easy headline and narrative, right? It's something that sells papers. It's a It feels moralistic. It makes the journalist feel good. It makes the reader feel good. You get to feel smug and superior. And if people are making money on this thing, I mean, Bitcoin is such an attractive populist whipping boy. I think we are going to see more pushback. In that, look, no one who's a more hateable group than the crypto rich, right? You've got a bunch of, frankly, largely, at least in the Western Hemisphere, largely white dudes. The whole, Bitcoin bro idea. There's some truth to that in the sense that, the crypto community in the Western Hemisphere is. It combines all of the negative demographics of its pieces. So like the trading industry is male dominated and white dominated, and computer science is male and white, and cryptography is male and white. And so it's not a surprise that cryptocurrency, which is kind of the intersection of those things, would be more that. So you've got young people who are getting stupidly rich without much effort. And, crypto people, they like to talk about, oh, it's so hard to hodl. Don't tell me that it's like easy to, survive these massive swings and we've earned our 100Xs. And it's like, to me, that's so insulting to an entrepreneur who worked 3 jobs to like buy a house, I mean, like, I'm not saying it's easy to hodl through an 80% dip, but normally in life.
You could sleep through it. You could sleep through it, but you couldn't sleep through building a company, basically.
Right. People don't usually, like in life, People don't
Yeah.
usually make millions of dollars, tens of millions of dollars by not clicking a button, right? It usually a lot more work goes into making $10 million. So, you've got young people who are like an easy demographic to attack, who got rich without trying. It's just a very attractive kind of populist target, right? It feels like undeserved wealth. And so tacking on any other moralistic things, tacking on the environmental stuff, tacking on, I think fairly soon we'll start seeing wealth inequality arguments. We'll start hearing from the progressive side, like, slap a one-time wealth tax on Bitcoiners. The same way it's like tax billionaires. Well, at least most, well, not, I don't know about most, but plenty of the billionaires people are talking about slapping a wealth tax on actually built companies of tremendous value to the world. You take someone like a Bezos, and I'm not personally a big fan of Facebook or Zuckerberg, but like Zuckerberg's a billionaire because he built something that people like using, right? And he built it over more than a decade, and built it, outcompeted everyone. And so say what you will, he at least worked for it, and gave the world something the world wanted, whether the world should have wanted it or not. I think we should expect more attacks, and that's just life.
God. I hate that narrative so much. I hate the narrative of like hate billionaires, tax billionaires more, because it's just like, then stop using their products if you hate them so much. Like just give it up. I hate it. It really disincentivizes people to want to actually make something of themselves. But just that narrative there as well is really interesting, because that it's for the white men's rich trading club or whatever, because there's a huge niche within cryptocurrency, which is actually, it's not even a niche, to be honest, which is actually, it's helped so many people from really terrible backgrounds turn their entire lives around, whether it be in trading, just buying Bitcoin, or whatever it is. I mean, there's even Isaiah Jackson, who has the book, I think it's, was it Bitcoin, what is it? Black Bitcoin, what's it called? I can't remember.
I'm blanking on the name, but I know what you're talking about.
Bitcoin and Black America. Maybe it's Bitcoin and Black America. I think that's the name. Yeah, and he talks about how Black people should get reparations in Bitcoin, and that is just completely contradictory to the narrative that I guess they want you to believe. So I mean, even for me, I'm in my 20s, and I'm so grateful for Bitcoin, because I've been able to turn a lot of things around, and I don't have to now think, oh gosh, inflation, how on earth did I now invest in the stock market? Like, I now need to run a job, run this, run that, and also learn how to trade and invest and all that. But my generation has Bitcoin, something that didn't have before.
Yeah, it is a generational wealth transfer, and agree that it is democratizing in many ways, and it creates huge amounts of entrepreneurial opportunity for people who are, I mean, there's so many young people with no resume who've been able to create successful companies in the industry, right? Just because it's so new that they can't have a pedigree. So definitely agree with that. And I'm also a huge believer in the humanitarian benefits. I just think it's not quite the progressive liberal kind of agenda. It's a much more libertarian one, in the sense that
I love it.
So part of what first drew me to Bitcoin was the idea that people can flee a totalitarian state with their wealth now. So like, I had relatives, some who fled Nazi Germany, some who didn't. And to anyone in a totalitarian state, whether it's Nazi Germany, Khmer Rouge, frankly, China today, you kind of have a choice. You can usually escape a totalitarian regime with the shirt on your back. Like, it's usually, in most of these examples, there was kind of at least a window before the border closed when you could have fled. But you would have been fleeing into poverty, right? If you were a middle-class Cambodian or Jew or a Hong Kong resident, if your choice is go to a European refugee camp for years, abandon your livelihood, your family, it basically thrust your family into extreme poverty, or take your, roll the dice that this totalitarian regime will hopefully revert to, the country that you've lived in and love, and that you hopefully can trust your neighbors. A lot of people stay. Whereas if you could leave, and being able to flee the country just, with a password in your head, you could take your wealth with you. I think it is an incredible weapon against totalitarianism. It's going to allow people in general to flee totalitarian states with their wealth faster, more aggressively. That undercuts the totalitarian state itself, because it pulls wealth out of the country. So I'm a huge believer in cryptocurrency from the human rights perspective, but it's not a wealth equalizer. It's not like a lower middle class person in America is automatically going to close the gap with billionaires because of Bitcoin.
No.
So it's humanitarian in helping the worst off in the world, the people who truly are oppressed, not the people who are just unhappy with the wealth inequality.
Yeah, and I think that's such an interesting point, you know, in terms of fleeing these regimes, because just back to Nazi Germany, Jews were swallowing gold when they had that time, when they had that gap, when, you know, people knew something was, I think after like Kristallnacht or whatever it was, like after that, people had that gap and they knew, get your papers and go. They were swallowing gold. I can't remember whether it's in the film. I can't remember. I was watching Schindler's List, but I don't know if the scene is in that or not. I can't remember, or whether it's a museum. But I just remember seeing a picture of people swallowing gold and just thinking, wow, like that's insane. Like the portability of Bitcoin, you know?
Yeah, and gold, precious jewels. I have a friend whose family fled from Cambodia with a piece of jade, and that piece of jade was the start of their life in Canada.
What's jade? Forgive me, I don't know what jade is.
Oh, it's a stone that is very precious, particularly in Asian cultures. Okay. I think it's mostly mined in Asia, but it's just also very culturally significant. I feel bad saying Asia. I'm just very ignorant of. I know it's part of Chinese culture. I don't know if it's other Asian countries. So I'm ignorant, but the moral of the story was this rock was the key to them escaping with wealth. But yeah, I mean, obviously, cryptocurrency is infinitely better. You're not having border guards check your stool if you're right. Swallowing gold is certainly not ideal. No,
it's not ideal, but you know, it was done. But okay, so you're obviously really into Bitcoin. Your perception changed. You've dedicated your now career to all of this. But I know that you're not a Bitcoin maximalist. So I do want to talk about that because that's something that I'm kind of navigating actually at the moment, and it's all really interesting what's happening, particularly with DeFi. Ethereum. Okay, so I'm not going to ask you what are your thoughts because that's just a terrible question.
Yeah.
But I want to kind of, tell me where do you draw that line between a shitcoin and Bitcoin? That's my question.
So I think to me, it's actually very frustrating because trying to debate the no coiners like a Nouriel Roubini or Peter Schiff is frustrating because they make such simply wrong statements. And so everyone in crypto gets frustrated. Like Nouriel Roubini will say, you know, it's tulips, it's a bubble. And then it's like, well, you've been saying that for 7 years and the tulip bubble lasted 8 months. And tulips weren't programmable, censorship resistant, depreciation resistant, provably scarce. Like it's a terrible analogy and you're just wrong and you keep being wrong. And then same with like Roubini 5 years ago was saying, well, there's no institutional adoption. Well, yeah, it was too early and now we see it, right? So all those arguments are just, they're obviously either unfair in that it's just too early. You know, someone saying the first year Bitcoin was created, this isn't accepted by merchants worldwide, therefore it's a failure. It's like, it's been around for a year. Like this is like email in 1974, right? So I find the Bitcoin maximalist arguments identical. And it's weird in that literally the arguments are almost word for word the same as Nouriel Roubini's. The anti-Bitcoin arguments are identical to the anti-shitcoin arguments to the word if you replace Bitcoin with Ethereum, let's say. So the maximalist arguments when I got in this industry really 5 years ago were anything that you want to do in crypto, you can do on Bitcoin. Yeah. That was a big one. And my answer, and at the time, there wasn't that much being done in crypto, right? DeFi didn't exist yet. NFTs didn't exist yet. You really didn't have much happening. Like you couldn't use crypto for much other than simple store of value and payments. So it wasn't obviously wrong, but I said, I bet you're going to be wrong. Maybe eventually you're right. Maybe in 5-10 years, Bitcoin will evolve to be able to offer anything, but there's going to be a huge amount of time where Bitcoin is optimizing for stability and security, meaning it's to the extent it evolves at all, it's going to evolve very slowly. And eventually we may get everything we want via layer 2s, but certainly in 2016, 2017, there was nothing like that on the horizon. And now we've seen the maximalist argument was wrong in that there's a lot of stuff that people value and can't do on Bitcoin. So today, it's still the same arguments. The maximalists will still say, well, you could in theory do DeFi on Bitcoin. You could in theory do NFTs on Bitcoin. And it's like, well, sure, but you can't. And eventually maybe you will be able to, and great. Like that's the nature. It's almost like saying like Amazon has no value because in theory, JP Morgan Chase could evolve to do the same thing as them. Well, great. Okay. Like let's talk in 10 years. Like, okay, but Amazon clearly has value today. So there's incredible adoption and usage of DeFi and NFTs today. There's more than 100,000 owners of Top Shot, for example. Those are largely people who've never touched any other cryptocurrency and bought MBA collectibles on the Flow blockchain. Those don't exist on Bitcoin. Maybe someday they will, but in the interim, people are getting value from Flow. They're getting value from MBA Top Shots. Similarly with DeFi, eventually maybe this will be on Bitcoin, but for the time being, people are getting value from DeFi on Ethereum. So we see the product market fit, we see the adoption, we see the usage, and we see that we can get stuff people want with provable product market fit on platforms other than Bitcoin. So the maximalists are just wrong. They've been wrong for 5 years. When they mock ICOs, they've been wrong. Like, the no-coiners, when Bitcoin dips from 60K to 50K, they're like, see, we were right. It's a bubble. It crashed.
Right.
And it's like, well, you've been saying that since Bitcoin was $100. So no, you're not right because it dipped. So the maximalists say the same thing when an ICO fails. It's like, oh, one ICO failed. ICOs in general have made investors tons of money. They've outperformed Bitcoin. An investor, people who've been calling Ethereum a scam since 2014, they're like, see, I was right because Ethereum's underperformed Bitcoin for the last 6 months. It's like, no, you weren't right. If you put one Bitcoin into the Ethereum ICO, I believe it would now be worth $3.6 million. You would have made more than 40x your Bitcoin. So they're just wrong.
I have a cheeky question.
Yeah.
I have a cheeky question because I'm quite direct with things. So this is just the way my mind works. But whatever.
Please.
So of course you've got the likes of Adam Back, who they know what they're talking about. They're fantastic. But outside of those, let's call them pioneers, outside of these kind of people, you have people just in the community. And do you find that there's a lot of Bitcoin maximalism potentially comes from the fact that they maybe don't understand DeFi or haven't done enough research, and it's kind of easier just to sort of push something aside and disregard it and just find, let's say, home in a community and find protection in a community rather than being brave enough to potentially, think, actually, hang on, people can, take out loans and mortgages in countries that don't have any financial infrastructure. What are your thoughts?
I think it really varies by person. There are some maximalists who are very informed and educated about everything else. And for some of them, it comes from, basically, there are a lot of shitcoins that are true shitcoins that are outright scams that are rug pull. Some of them are true scams. There's a lot of those, right? People who are intentionally scamming via ICOs or new coin launches. There's a lot of that. And then some of them are accidental scams where, you've got a couple kids, they might be well-intentioned, they don't know what they don't know. And so some of the people who criticize Ethereum will say, okay, maybe it's not a deliberate scam, but they think it's an accidental scam because they think it's not secure enough. So a common criticism was Ethereum intends to migrate to proof of stake, and proof of stake doesn't work. And the problem with the argument that proof of stake doesn't work is it's the exact same logic of the people who said proof of work doesn't work, which is on paper, it has vulnerabilities. There's no question that proof of stake is of questionable security. We don't know that it's secure. There's known vulnerabilities. But all of that was true of proof of work. And the only reason that we trust proof of work is not because that the math is perfect, it's because it works in practice. So those same people, including people like Greg Maxwell, who were skeptical of proof of work, it's the same psychology that makes it's basically a conservative investing mindset. It's someone comes up with something innovative and new and cool, and you see that it's not perfect. There are holes in it, legitimate vulnerabilities. And so one type of person says, this is innovation, right? And they're not going to get it perfect on the first try. It's going to be a work in progress. And other people say, this thing isn't perfect and it's trying to take on my beloved Bitcoin. It's trash. It's garbage. It's fundamentally flawed. So, if you view this as a work in progress, it's much easier to be kind of tolerant of the experimentation and the foibles. And I view this industry much more through the VC lens, which is you don't expect anything to be right on the first try. You expect teams to pivot. You expect the engineering to evolve over time. So that's a big part of it. And then I think another part is some people. So the same way that a Rubini, a no coiner, will point at the long tail of scam cryptocurrencies and say all cryptocurrencies are bad. Look at all these ICO scams. Bitcoin is a scam too. It's tainted by association. A lot of the maximalists apply the exact same thinking
Right.
They just exclude Bitcoin. So they say, Ari, I don't care if there's 1 or 2 or 5 ICOs that are real, that are not scams, that are innovative, that are interesting technology, and that may have a real use case. Come on, Ari, like 99.9% of this stuff is crap. And my answer to that would be, so do you include Bitcoin as part of that crap? No, you carve out Bitcoin. You say, you say just because 99.9% of cryptocurrencies are crap doesn't mean Bitcoin's crap. And I just go one step further and I say just because 99.9% of cryptocurrencies are crap doesn't mean Bitcoin and these 10 others are crap. So it's partly just where do you draw the line? And your comment about like a little bit of lack of knowledge or intellectual laziness, I think does play a role there. It's, are you willing to separate the wheat from the chaff? And Bitcoiners are, it's just they stop at Bitcoin.
Yeah, I mean, it's a bit of a head spin, because I remember I put out a comment sort of saying, you know, because there's a lot of tribalism, I put out a comment saying, imagine not liking someone, you know, personally, really having a dislike to them because they prefer a different coin to you. And I always found, I've never forgotten the response I got to that, which was people calling the likes of Vitalik and many other people actual scammers, comparing them to Charles Ponzi, Bernie Madoff, and all these things. And I couldn't believe the comparison. And I think that for me was like the first time I really kind of like swallowed the tribalism pill and was like, whew, I felt that. You know?
I will say a lot of the tribalism is for show. It's marketing and signaling, and because a lot of the Bitcoin core developers and self-proclaimed maximalists actually have exposure to other coins. Many have actually launched other coins. So a huge percentage of all cryptocurrencies have actually been launched by Bitcoin core developers. Now, many of those people end up being kind of excommunicated later. So whether it's the Bitcoin hard forks, whether it's, I don't remember if Charles Hoskinson was a Bitcoin core dev. A lot of the founders of other coins, Decred was founded by Bitcoin core.
Charles was ETH, so I doubt he was on Bitcoin.
He was ETH. I'm not sure. Our viewers can check, but a lot of founders of let's see which other ones. I don't know if Ricardo was a Bitcoin core dev, but a lot of the Monero community was definitely Bitcoin miners and early adopters. Decred was founded by Bitcoin core devs. A lot of them were, and Grin was founded by a current Bitcoin core developer, which is a Mimblewimble coin implementation. Sorry, not Mimblewimble coin is its own thing by another Bitcoin OG, Trace Meyer, who was shilling it. And then you have like I think it's INX token. A bunch of the Blockstream employees launched an ERC20 equity coin. And there was a great example where like these are Bitcoin maximalists who call Ethereum a scam, and they launched a token on Ethereum. And they did that because it was the best way to fundraise, and it was the best way to issue an equity token for their exchange. So a lot of it is public signaling to build brand, and a lot of these maximalists then monetize their brand by selling trading seminars and carnivory dinners and their books, and at the same time they're investing I believe it was Saifedean publicly said, Saifedean's the author of the Bitcoin Standard.
The Bitcoin Standard,
and a very public and aggressive Bitcoin maximalist. He invested in the Ethereum presale, and he said publicly he lost his keys. Now he says, now to be fair, anyone can change their mind. The fact that he invested in the ICO doesn't mean he's not allowed to then become a maximalist. And he says he then realized it was a scam. But my point is just most of the maximalists have exposure to other coins. A lot of them are trying to virtue signal.
Yeah, this is a really interesting point. I had a conversation with the CEO of a company in the crypto space the other day, and he said that to me. He said to me, Layah, they're all investing in other coins, and I was like, I'm a very honest person. So what you see is what you get with me. I'm very straight up. So to me, the idea that, you know, you have people talking about Bitcoin only, and then and using terms like shitcoins, and they're actually investing in other things, that really took me back. I couldn't believe it. So I'm really fascinated by that. I think that's really interesting. But let's talk about NFTs, because NFTs are really hot right now. And there's two things going on here from my perspective. So we've got this supposed bubble, right, whereby if something is just inherently an NFT, then, you know, eventually it will be, you know, invest now because it's the next big thing. It's the Uber, it's whatever it is, it's Facebook. But then also, so there's that, which I'm not really interested in. But then there's also just the idea of giving something a digital identity and verifying it. And for me, that is really powerful for example, Rolex watches, Louis Vuitton handbags, being able to literally track where it came from. So my brother's really into Rolex watches. And he's telling me that if you buy it through this country, that country, then it's actually less valuable. If you buy it, for example, he was telling me, oh, because this watch came through Dubai, it's actually less valuable than the same Rolex watch which came through Europe and stuff like that. So for that reason, I'm like, cool, I get it. But I'm not understanding this bubble over here, which is supposedly, buy it now and then, sell it off later, like crypto kitties or, swords and this and that you get in games.
Yeah. NFTs were such a no-brainer to me as a obvious early theme for crypto, one of the first use cases to go mainstream. For like 18 different reasons. The world is being digital, people living more and more of their lives. People use crypto punks to signal on social media. It's the modern version of having a Picasso on your wall. Someone has a $500,000 crypto punk as their Twitter avatar. And now, especially with COVID, we're all spending all our time online. We can't really show off our homes to friends. And so we're showing off our online identities. And increasingly, that's going to become metaverse identities, whether it's a World of Warcraft type game. People spend so much money on skins, for example, and it's largely Gen Z and young millennials who will spend, if they're spending 30 hours a week with their friends in a game, the idea of decorating their character and spending the same amount of money that you would spend on a Rolex or a Gucci handbag makes total sense, because that's where you get to socially peacock. That's where you get to impress your friends and show off your taste, your style. And then, as you noted, there's the provenance side, which is like a concern I personally have is if I haven't bought almost any like high-end collectibles, and part of the reason is I'm concerned that we're passing this point where forgeries are indistinguishable from the real. So every year, Christie's and Sotheby's gets tricked into selling tens of millions of dollars of forged art, forged wine, and that's with their experts closely examining it. They do every test that they do, spectrographic tests. They do, that's under a microscope. They're getting fooled by forgeries. So people tell me, this is a common debate. I say on Twitter, there are now Rolex forgeries and Gucci handbag forgeries and Picasso forgeries that you can't distinguish from the real thing. And everyone's like, no, I can tell the difference. No, you can't. You could tell the difference 20 years ago. You can tell the difference from a cheap knockoff. There are now Rolexes being made, and they're not super cheap to make. So if it's a knockoff of a $20,000 Rolex, they cost $2,000 to make because they're made with the real materials. They're made with it's a solid gold Rolex.
They just came out of a different warehouse, basically.
Exactly. They I saw there's a YouTube clip of someone comparing a real Patek to a knockoff, including a tourbillon, which I'm probably mispronouncing, which is like a really expensive handmade thing that slightly increases the precision of the time. And it was a watch enthusiast looking at both with like a jeweler's loupe, and he's like, I can just barely tell the difference. And it's both were handcrafted, both were handmade, and some of the parts probably came out of the exact same factories. So so the problem is if I can't tell if I'm an enthusiast and I really like, let's say, Patek watches and I want to spend $40,000 on one, but I know that I can't tell the difference between that and a $3,000 knockoff, and I know that no one looking at it will be either, and I can't even tell the difference, then how do I justify spending the 40K? So NFTs, now, I don't think humans are going to suddenly stop valuing authenticity. Right, we're still going to value authenticity. We're still going to want to have the original, the real brand item. So the only way to solve for that is with a cryptographic signature to prove authenticity.
Yeah, I mean, I'm just excited. Okay, so I also agree with you when you say everything is going online. It's an argument that I always make, right? Whether it be dating, socializing, eating, the way we order food, everything is online. So it only makes sense that, we will move everything online. Actually, it's how someone explained it to me, and I thought it was really cool. So Instagram and Facebook is basically kind of like you were saying, it's how you peacock online. It's how you show yourself off. And if you try to explain that, let's say to your grandparents, that you would have this version of yourself on the online that gives you value, supposedly, they'd be like, but what about just the value in real life? Why do you need an online version of yourself? And I think that's where, for me, I haven't taken that step in terms of NFTs, because I can't think, why would I need an online art room? I'm just sort of thinking, why would I need that? But for some reason, I feel the need to have an online photo gallery of myself on Instagram.
Yeah, I think a little bit of this is it's early in that we don't really have the metaverses yet. So we
Yeah,
have games and we do have stuff like Sim Life. But the reality is most people are not spending that much time in these non-game metaverses. That's going to change. The technology is getting better in a post-COVID world. Like there was a
oh,
virtual
that's so
Burning
weird.
Man. Last year, there was a VR Burning Man. There was a VR, crypto conferences. And they're very basic today, but that's where the world's headed. So yeah, I do think NFTs are a bubble in the sense that
Yeah,
if you take the average NFT today, it's probably worth less in a year. With that
that's what I'm
said,
saying.
I agree with that, and I wouldn't passively buy a basket of NFTs today. But it's going to grow horizontally 100x in the next 3 years, 100x, and that's such a clear bet because it's hard to bet on. It's hard to bet on horizontal growth in an industry, but all of the IP owners are racing to do deals. So NBA Top Shot has been so successful for the
Yeah,
NBA. It's such a successful proof of concept that all the other leagues, all the top musicians, everyone says, "Holy crap! These guys just minted $200 million out of nowhere selling collectibles." DJs like Blau. Blau's been in the crypto industry for like 5 years. The guy is a world-class DJ, but also has really put in his time in crypto. He's been a passionate early adopter for, I don't know when he first got in, but he was actually in our offices pitching a startup in 2018.
nice.
And
Okay.
he ended up calling off the startup, at least on the fundraising side, because he ended up not loving the business model. And I have nothing but respect for him, by the way. So he did $11 million of sales in one day selling musical NFTs. They're musical with visuals. He has a graphic designer that he works with. And every DJ in the world sees that. I mean, that's real money for even the highest end performers. A Steve Aoki, a Taylor Swift, a Beyonce. The idea that you can do $11 million of sales in a day is meaningful
Yeah, it's
numbers
amazing.
for every artist and musician in the world. So everyone's coming. All the musicians, celebrities, sports teams, athletes, everyone is coming and wants to get a piece of the demand that they see is there.
And I think that's what's so insane about 2021 and this whole bull market in general is that it's just so different to 2017. This is mainstream. Like I got in just at the end of 2017, and there was this constant. I used to do hard news, basically hard crypto news, and there was this constant conversation about mass adoption. Like on Twitter when people basically like making fun of something and they do like the capital letters and the lower letters. That's how, I don't know if that makes sense. That's how I feel about mass adoption. When I hear the word mass adoption, I just hear like mass adoption. Like it's just this really cringy term, but like it is now, like it's happening now, which is so insane to see it happening. I mean, even Soldier Boy, it's just more than 2017. So I think it's really insane. But I want to move on a little bit, and I want to talk a bit about entrepreneurship because BlockTower and so on. So you guys actually launched in 2007, was it 2017, in the middle of the bull market. So by the time you were sort of fully up and running, we were in a bear market. So firstly, that's insane. That blew my mind when I learned about that. So major congrats. And how did you do that? Like how did you as such a new company survive just basically plunging into the bear market? Because I don't think anybody expected a 20K down to 3. I don't think anyone kind of expected that.
Yeah, frankly, it was brutal as an entrepreneur. Brutal, and we were fortunate in that if we hadn't launched when we did, we launched in mid-August 2017. Like anyone who launched in, say, December with a long bias crypto strategy, almost impossible to survive, because
really
in finance, you really can't survive. So first a sentence on how hedge funds work for your audience. Typically, hedge funds try to get by on their management fee. So a common structure will be something like 2 and 20, meaning they charge 2% of a fee. You charge 2% a year on your asset base. So if you're running $1 billion fund, that'd be 20 million a year, and you charge carry on performance. And in traditional finance, typically hedge funds pay their operating expenses with the management fee and hope to get rich on carry. In crypto, it's very hard to get to the scale where the management fee covers your expenses. So, a newly launched crypto fund generally is not going to raise $1 billion. The only crypto funds that have gone to $1 billion, to my knowledge, have gotten there largely organically, meaning maybe they raised 100 million and then crypto 10x'd, and so now they're $1 billion. So almost everyone basically loses money on the management fee. We did through most of our history, and you really have to think of yourself more as like a growth startup. And so do you have the capital to finance losses for years, to grow, to get to a scale that you're a profitable enterprise? So that was how we thought of ourselves from the beginning. Literally when we launched, I told my co-founder, I'm probably not going to time it perfectly, but there is going to be an 80% crash probably in the next year or two. And our job is to survive that bear market. And if we survive it, we'll be an industry leader, because almost no one's going to survive it. And I'm a big believer that franchises in finance, as well as in traditional, in any industry, get built in bear markets. That's when when the going is good, there's just a lot of competition. There's a lot of faces in the crowd. There's a lot of people doing well. It's when the tide comes out, you see who's swimming without clothes. And most people give up, or they don't have a choice, they lose too much money, or their investors abandon them. So if you're able to survive that bear market, you're in a really good position, whether you're Amazon coming out of the tech crash, whether you're a finance company. So for us, I think it was really, we expected there to be a protracted bear market and psychologically prepared for it, financially prepared for it. It's not to say we traded it perfectly. We didn't. It's not like I timed the market, anywhere near perfectly at all. But just being psychologically ready, like my whole team, I told them once a week, guys, be mentally ready. There's going to be an 80% crash, a 2-year bear market. Like, we're in it for the long haul. And if you're not, like, you need to be mentally prepared for this. And then one piece of it is frankly just willing to make the bet to keep going. So for hedge funds, if you're underwater, meaning if you lose money, you don't get to collect carry until your investors are back above the high water mark. And the idea is that you don't get to collect carry twice on the same move. So for example, if a hedge fund goes up 100%, the year ends, they get to collect carry. If it then falls 100%, falls 50%, and then goes up 100% again, you shouldn't get to collect carry a second time on that same move, right? It wouldn't be fair to your investors. So what happens in a bear market is hedge funds are wildly underwater. They might be 30, 50, 70% underwater, which means you're not really making any money until you first earn a 200 or 300 or 400% return. Most hedge funds just shut down. They're like, man, we're not making any money for years. We have to earn a 300% return just before we get paid $1. Why would we stay open? So that happens to almost every hedge fund in crypto. If you're running any kind of long bias strategy, you're almost certainly going to lose money in a bear market. And like, my goal is always to lose a lot less than crypto, but I'm actually not even trying to make money from the decline. I think it's too hard. You can run an absolute return or a market neutral strategy or an arbitrage strategy, that's great. But if you're trying to capture the beta, if you're trying to capture the 10x upside, very, very hard to be net short through the bear market. So my goal is try to outperform when crypto's going up, and then try to lose a lot less when crypto's going down. And if you do both those things, then you end up with a very, very good return over a full cycle. But my point though is, you're still losing money in the bear market. You still need to have the fortitude, the grit, the belief that there's going to be another bull run, and you're willing to invest to see that through.
Yeah, I think the thing which really just stuck out there was the idea of just preparing not just yourself, but everyone around you, the entire team, saying, guys, this is gonna be difficult. The bear market is coming. When you know that, I think it's all about reality, isn't it? Just sort of having that reality check and knowing things don't always go up. So just hold on tight, and we're in it for the long run. But for people who, so I get this question a lot. And so for people who aren't necessarily technical, or they don't have an investor background like you have, an investing background like you have, how can they get involved? Like, how can they see, okay, I like this space, politically I'm aligned. What can I do to get involved as an entrepreneur? What tips would you give them?
Yeah, I think the starting point is really what work you want to be doing. If you're an artist, getting involved in creating NFT art is a great idea. If you're an accountant, applying your skill set. If you're a lawyer, applying basically all of the skill sets that exist in the world are useful in crypto. So marketing, PR, HR, recruiting. You're an example of this, where you're running a business that is not inherently a crypto business, but you're applying it to crypto, right? So it happened to be that my skill set was trading and investing. I applied that to crypto, but so I think the starting point is, what is your skill set? And if you're very young, like let's say you're just coming out of college, what do you want to be doing with your life? What's the work you want to be doing? So and I think this is a useful exercise for anyone looking at any job, which is there's kind of two decisions, which is what industry do you want to be in, and then what role do you want to have. So an accountant working for a university, a nonprofit, an accountant working for General Electric, you're still doing accounting work. The industry matters a lot, but your day to day, it matters more. What is your role, right? Are you if I'm trading Bitcoin or I'm trading nat gas, I'm still a trader, and my day to day is not that different. If I don't like trading, I shouldn't be a trader. It doesn't matter what industry I'm in. Same with if you don't be a crypto accountant if you don't like accounting. Don't be a crypto lawyer if you don't want to be a lawyer. So I think it starts with okay, you know what industry you want to be in, but now what is your career path? And if you couldn't imagine doing it if it wasn't crypto, it's probably not going to be a good fit. Like, don't become an accountant just to become a crypto accountant, right? If you don't like accounting, it's not going to last. But within that, it's every skill set is necessary. People are building, I'm thinking of Bobby, who runs, I think it's called Proof of Talent, which is a recruiting firm, and it's a recruiting firm. It's a recruiting.
Proof of Talent. That's cool.
Yeah, I'm pretty sure I'm getting the name right. Proof of Talent. I'm blanking on his last name, but it's very well respected, well regarded. They've placed a ton of people at crypto funds, crypto firms. I don't have any connection to them. I'm not trying to shill them or anything, but I've only heard good things about them, and I've referred a couple people to them just to be helpful. So just an example where a guy said, I'm a recruiter. I want to build a recruiting firm. Here's a nascent industry, which is going to make it, right? If you're trying to build a recruiting firm in the oil and gas industry, you're competing against incumbents who know everyone, who've been doing it forever, who have the Rolodexes. Very hard to start a company. So, but blue ocean, right? Bobby was able to build a big, profitable, meaningful, valuable recruiting firm because it's a new industry in crypto.
Yeah, I think that's also something which I can totally relate to, because, coming into this space, there's so many opportunities and it's so unbelievable. Even just in journalism, because the entire traditional world, in any sense, it doesn't want to change, it doesn't want to innovate, it doesn't want to grow. Whereas this space, everybody wants to grow. And I think it's amazing. But just finally, what are you up to and where can people find you? Just shill yourself, Ari.
A nice thing is I really never have anything to shill, in that, no, I mean, seriously, it makes it pleasant in that I'm just chatting with you and offering my sincere views, because I don't have any, I'm not selling anything. So I'm on Twitter as @AriDavidPaul. That's how people can reach me, in any content I produce in any forum I post there. Yeah, that's it. And then I will probably be in Miami for the Bitcoin conference, and I will be in Miami after that generally. So you can look me up. We can get coffee.
There we go. Ari, I want to thank you so much. It's just been so great. It's been such a pleasure. I've learned so much, particularly all about energy. I'm still fascinated by the point you made about it being unconstitutional to ban Bitcoin. I've actually written that down, so I'm going to go do some research on that. But yeah, I want to thank you so much. It's been great. My pleasure. Thank you for having me. Absolutely. And guys, thank you so much for tuning in. Thank you to the sponsors, and we'll see you all next week on Thursday. Bye-bye. Bye.